an optimal capital structure. So like what I said, it is the maximum, or it is the one that maximizes the price of the firm stock. And it is the debt ratio that is lower than the one that maximizes expected EPS. Mamaya makikita natin yan, no? Makikita nyo na yung highest EPS is the one with the highest liability. Ulitin ko the one that maximizes the expected EPS is the one also that has the highest liability. But the problem is that is not the one that maximizes the stock price. Rather, the one that is lower than the highest EPS, actually second nga second to the highest expected EPS is the one that gives you the highest price of the stock, no? Pero depende pa rin yun sa capital structure natin. But the point is, the one with the highest liability that gives you the highest EPS is not the one that maximizes the price of stock. Rather, the one with the lower EPS is the one that gives you the maximum price of the stock. Okay? So at a certain extent, the higher debt levels increases the expected EPS and stock prices. However, at a certain point, a high level of debts also increases the firm's risk, which raises the cost of equity and has the tendency to reduce stock price. Okay, kaya sabi natin nga, dapat at certain level of liability, we should be able to determine yung maximum liability that we can use before the price of the stock goes down. Kasi nga, the higher the liability, the higher the risk, the higher the interest rate that will be charged to the company, to the point that it is now risky for the company to have the bankruptcy cost that reduces the price of the stock of the company. Okay, so let's talk of recapitalization. So what does it mean? So yung recapitalization, from the word recapitalization, so you are trying to change the capital structure of the company. So how it is being done? By borrowing. And then once you borrowed money, the entire amount of the borrowing will be used to purchase your stock, repurchase your stock. So it becomes what? A treasury stock. And if it is a treasury stock, these treasury stocks are deducted from your common shares outstanding. Okay? Okay, next. Example natin, ito. Ito, nandito na tayo sa pag-determine ng optimum capital structure. Okay, so meron tayong borrowed amount. So meron tayong 250, 500, 750, 1,000. So actually millions yan, in thousands pala. So 250,000, 500,000, 750,000, 1 million. So the total assets, 2 million. So kung meron tayong 250 by 2,000, 0.125. 500 by 2,000, 0.25, So yung debt equity ratio, actually, hindi mo kailangan ng debt equity ratio na yan dyan, Kasi ang kailangan natin yung equity to assets din, because that comprises the capital structure. Hindi naman DE, kundi dapat EA, equity to assets. Pero anyway, ganyan siya, So the bond rating, if you have 250 liability, is AA, and that gives you cost of capital of 8% before tax, and then 500, 9%, 750, 11.5, and 1,000, 14%. So as you increases your liability, the credit rating or the bond rating decreases. Kasi AA, A, BBB, BB. And the cost of debt before tax goes higher also. Okay, next. So what is the effect of recapitalization at various debt levels on the EPS and times interest earned at each level? So ito yung mga information na binigay sa atin. We have the dividends, dividend zero, so we're using the EPS instead. So we can use, instead of the dividends, we're using the EPS in replacement of the dividends. Okay, so EPS. So meron tayong computation na EBIT minus the interest, then times 1 minus T. Then you have the shares outstanding. Okay, so for this case, we do not have the liability yet. Wala pa tayong liability. So that's why it is 400,000 times 0.6 over 80,000. So you have for the EPS. Now let us assume that they issued already 250 na liabilities. So ito. And the interest rate is 8% based on the table I showed you, di ba? So they use liability of 250,000 and then they use that to purchase your stocks, your own stocks. And since the price of the stock in the market is 25, so you divide 250,000 by 25. So that gives you 10,000. So in 10,000 ngayon will be a treasury stock, which will be deducted from your common shares outstanding. So magiging 70,000. And then this time we have the interest. No, yung 0.08 times 250,000, then deduct from the EBIT, and then times the net of tax na 0.60, and then divide by 70,000, you will get the EPS to be 3.26. We can see that the EPS now will increase to 3.26 because of the presence of the liability. O kaya tignan yung EPS 3.26, dati 3. So tumaas siya because of the presence of liability and the decrease of the common shares outstanding. So despite of the decrease in net income, your common shares also decreased, no? By 10,000. So the reason why your EPS increased to 3.26. Now to compute for the times interest earned, now we have that interest expense of 20,000 and then the EBIT of 400,000. So the times interest earned is 20 times. Ngayon kung 500,000, the same procedure, no? 500,000 divided by 25, you get 20,000 shares. And then the 20,000 shares deduct from 80,000. And then the numerator, this time the interest rate is 9%. You multiply by the 500,000. So you get the interest expense. So minus from 400,000 and then times the net of tax of 0.60. And you will get the EPS of 3.55. And then for the tie, now you will get 8.9 times. So you can see as you added liabilities to the book, the EPS increases. However, the interest earned times interest earned decreases. Kasi dito EPS 355, yung tie natin 8.9. O, di ba? Dito 3.26 tapos 20 times. So yung EPS natin tumataas pero yung tie natin bumababa. Eh kung bumababa yung tie, ibig sabihin the company now is become riskier. Kasi yung capacity mo to pay the interest decreases. Okay? Okay, so ito. So ganun din ang procedure dito class Hindi ko na-explain para matapos ko itong table na to. So ganun din ang gagawin dyan sa 750,000. You buy the stocks and then you compute for the EPS at saka tie, no? So anyway, I have the summary here class. Ito yung summary natin. So as you increases your debts, ayan, 250 divided 250, 500, 750 and 1 million, the EPS increases, 3, 326, 355, 3.77, 3.9. But the tie or the times interest earned decreases from 20 to 8.9, 4.6 and 2.9. Okay, tingnan niyo yung risk, Akala nyo pagka tumataas yung EPS, gumaganda yung company rin. Hindi, kasi yung time mo naman bumababa. Okay, because as you increases your liability, the company becomes riskier, And of course, yung stockholders natin bears all the risk. Kasi instead of receiving the entire proceeds from selling the assets of the company, once it becomes bankrupt, they will be now the second, people to receive. Kung may preferred stock pa yan, di-trade pa siya. Di ba? So, ganun siya. Okay, so the Hamada equation. Okay, so yung Hamada equation, to shorten, yung Hamada equation kasi some companies are not levered. So, meaning they do not have liabilities. So, therefore, you cannot compute for the beta. So this Hamada equation help us to compute for the beta of the company. Now it becomes levered. So from unlevered to levered ang gagawin natin dito sa company na to, And then this Hamada equation also gives us the effect no, of the increasing liability to the beta and to the cost of capital, no, in particular equity. Kasi we are going to use the CAPM for the for the cost of equity. So this one also, the Hamada equation shows you the change in the capital structure, no? So pagka nag-change yung capital structure, ibig sabihin nun, yung WACC ni firm also will also change. Because as you increases your liability, no, the beta of the company will also increase. Bakit tumataas yung beta? Because the company becomes riskier. And therefore, the cost of the equity also will also increase. So yun ang sinasabi ni Hamada equation. But Hamada equation is helping us to convert, no, the unlevered company to a levered company. So ito yung formula niya. Ito yung ating formula for the Hamada equation. So you have the B subscript of L and then the B subscript of U. Then 1 plus, no, 1 minus T times that DE, no? So the DE is the debt equity ratio measured by the financial leverage under the Hamada equation, no? Kaya binibigay din niya yung DE, pero actually dapat niya hindi na yan, no? Kasi pagdating doon sa WACC, no? Pero huwag natin pakialaman yung formula ni Hamada. Formula niya yan, no? So but we are applying this, no? Kasi very important din daw, ha? So at the told, by the way, class, no, in the board exam, lumabas na to. Lumabas na yan. And many were actually surprised when the Hamada equation was given, no? Marami nagulat nung binigay ito. Okay, so yan na nga yung formula natin. And then you have the given, no? Below, meron tayong given sa baba. So ito, suppose the risk-free rate is 6%, as is the market risk premium, the unlevered beta of the firm is 1. Kasi kung ang beta ng company talaga, pagka walang liabilities, parang the same as the market. So being 1. And then the total assets was 2 million. Okay, so dito, ito yung computation, no? So actually, we are using also the liabilities that we used a while ago. Na may debt 0, meron debt 250, debt 500, and then debt 750. So hindi ko na lang pinagamit yung 1,000 or mga thousands na to, ha? But for the debt 0, the beta of the company will be 1. No? Kasi ito ay 0, di ba? Tapos plus 1 times 1 plus times 1 is 1. Kaya pagdating rito, naging si unlevered company, no, that has a beta of 1 becomes will have a beta of 1 also, no? Magiging levered beta na siya na 1 kasi ang levered beta niya dati 1, but this time levered beta na siya 1. Kasi from walang utang, pero ito wala pa rin siyang utang, kaya lumalabas yung beta niya 1 pa rin. But the cost of equity is 12%, no? 12%. But this time, nagdagdag na tayo ngayon ng liability, no? So we can now compute for the beta. Kasi pagka ang company does not have a liability, yung unlevered beta niya nga is 1. But once you compute the levered beta of this unlevered company, still the beta will be 1. No? Pero ngayon magbabago siya if there is an increase in liability o meron ng liability. No? So meron na tayo ngayon dito, if debt is equivalent to 250, makikita ninyo, dito sa part na to, meron na siyang 250 all over 1,750. No? Tapos nun, multiply natin sa 0.6, which is the market premium. No? Yan yung market premium natin, di ba? Kasi sabi rito ay 6% as a market risk premium. Ang market risk premium na siya, no? Okay, so market risk premium na yan. So, ito yung 0.6. Tapos, yun na nga, multiply sa 1, then multiply dun sa 1. So, this one is 1.087. Pero take note pala, class, ha? Kasi may naalala akong problem dati. Dito, balik ko lang dito. Yung BU, unlevered beta. Di ba sinabi ko sa inyo na ang market beta actually is 1. So, kung wala siyang liability, unlevered beta niya is also 1. No, pero may nakita ko na isang problem dati na yung beta ng unlevered company is more than 1. Okay, ibig sabihin, kung more than 1 yan, yun ang gagamitin nyo. But in this example, kasi we use the unlevered beta to be 1. Ha? Pero pagka unlevered beta ng company with no liabilities or will change the structure of the company's financial structure, yun ang gamitin nyo, yung beta na binigay. Ha? So, ganon. Ha? So, this one, yun na nga. So, makikita nyo class dito, sa part na to, nagbago yung beta natin. No? So, from 1, naging 1.0857 because of the presence of the liability of 250. And then once you apply this beta to your CAPM, ito, meron na tayong 1.0857 times 6% plus 6%. So the cost of equity now is 12.51%. So the same thing when we added yung another 250 to your liability, now it's 500. So 500, ito yon, divided by 1,500, no? Tapos multiply natin with it, so 1. Unlevered beta ngayon niya ay 1.2. And then the cost of equity is 13.2. So once we added the 750, ang magiging beta natin ulit, tataas na naman, 1.36. And then the liability is, cost of equity is 14.16%. So you would notice that as the debt increases, the levered beta will also increase and the cost of equity will also increase. So nandito yan, no? Ito yung summary class. Okay yan, no? So makikita natin na yung levered beta, no, ito, as you increases, if the liability increases, the levered beta also increases. And the cost of equity also increases. Kasi nga, nagiging risky si company as you increase your liabilities. So therefore, yung levered beta mo, tumataas na, pati yung cost of equity mo, tataas na. Calculating for the WACC. So, a while ago, pinakita ko paano mag-compute ng WACC, di ba? And you studied that also in your cost of capital in financial management. So, for 250, for example, ayan, 250. So, ang debt ratio natin ay 12.5, and then the equity ratio is 87.5. So, yung 12.5 na debt ratio natin multiply sa 4.8, and then the equity ratio of 87.5 times dun sa na-compute natin sa CAPM na 12.51, you will get a weighted average cost of capital of 11.55%. Then when the amount borrowed is 500, the debt ratio is 25. So you multiply this with the cost of debt after tax na 5.4%, and then plus the equity ratio times the cost of equity na 13.2. So the weighted average cost of capital is 11.25%. So you do that up to the end, bale. And you would notice that the lowest WACC is at a debt ratio of 25%, meaning you have to borrow money amounting to 500,000 pesos. Di ba meron tayong ginagamit natin na stock price with zero growth, no? Yan ang ginagamit nating formula. D1 over RS. Tama ba? But in this case, the EG is 0. Tama naman ang formula. No? Ito naman talaga is 0. Wala namang plus G dito. No? But the problem is, the expected dividend is not given in this problem. So instead, we can use the EPS to replace the expected dividend. So we can have now the expected EPS. Ito yung summary actually class. Now, tingnan ninyo. If you are using the EPS here, not to compute for the price of the stock, so we are using yung expected EPS 3.55 as a dividend, and then once you compute yung para sa price ng stock, kumbaga 3.55 divided by dun sa WACC yan. So 3.55 divided by 0.1125, you will get, yun? ulit-ulit, no? We have the, tama ba yun? 3.55 divided by 0.11. Ay, mali. 3.55. Ito pala yung estimated price. Yung 20, ano yun? Hindi, tama nga. Sandali. Saan ba nakuha yun? Sandali lang, ha? Nakalimutan ko bigla. EPS RS. Tama. EPS naman yun, ha? By the, ano yun? 3.55 divided by 0.1320. Ayun. So, ayun, no? So, we have the expected EPS of 3.55. And then we have the cost of equity. Ito yung ginamit natin na CAPM. Diba? Ginawa natin yung cost of equity. Tama ba yung using the Hamada equation? Natatandaan nyo? So, ito ulitin natin, ha? Para makita nyo. So, ito, diba? So, in this case, we already included, diba, yung liabilities. Ito, napasok na natin yung liabilities dyan. Kaya nagkaroon tayo ng beta, and then we have this one to get the cost of equity. So, lumalabas yan yung WACC natin, di ba? Okay, so balik tayo rito, ha. O, kung makikita ninyo, meron tayong expected EPS na 3.55, then divided by the cost of equity using the CAPM na 0.1320. And you will get 26.89 for the estimated price. 26.89. Nakita nyo, class? Nakita nyo? Ayan, no, naka-highlight. Actually, yung yellow yan eh. Yung yellow, yan na yun. So you would notice, class, that the one with the highest estimated price is the one with the lowest WACC. No? The one with the highest estimated price is the one with the lowest WACC, na 11.25%. And dun sa cost of equity, we already included the effect. No? We included the effect already of the liabilities included, no, in the cost of equity nga. Nakapasok na siya ron. Okay, so yan yung summary actually ng mga ginawa natin kanina. No, but the highlight is that the highest estimated price is 26.89 if the liability is, no, is 500,000, because that will give you 11.25% WACC. And we are saying, no, a while ago that the lowest WACC will give you the highest intrinsic price of the stock. Makita naman ninyo, no? Tama naman yung ating mga ginawa kanina. Okay? Naintindihan ba, class? Kaya hindi sinasabi na kung ano yung pinakamataas na EPS, siya yung pinakamataas. Hindi, no? Kasi ito yung pinakamataas na EPS. But the highest price is the one with the EPS lower than the highest. Kaya nga second pa nga siya kung tutusin, no? So, and then the WACC, no, yung lowest WACC is the one that gives you the highest estimated price of 26.89. So therefore, yung capital structure natin dapat ay 25% debt and then 75% equity. So yung capital structure natin should be 25-75. Okay? So if the capital structure will change, no, either increase or decrease in the debt to assets and to the equity to assets, your WACC will increase, and therefore the price of the stock will decrease. Okay, so yung capital structure, ito kay ito yung mga theories naman, no? According to Modigliani and Miller, no? Develop the capital structure irrelevance proposition. So actually, to be short, no, sabi ni Modigliani and Miller, regardless, no, kung ano raw yung capital structure ng company, Yun ang sinasabi niya. But the problem with Modigliani and Miller, ang dami ng assumptions na ginawa. No brokerage, no taxes, no bankruptcy costs, which are impossible in the real world. Kasi meron at meron niya mga yan. No? But anyway, kay Modigliani and Miller, sinasabi niya, it does not matter what capital structure a company uses to finance its operations. Pero ang sinasabi kasi ni Modigliani and Miller, the ideal is actually 100% liability and 0% debt. And that will maximize, sabi ng ganon, yung EPS ng company, which is true naman. But you cannot tell if that will maximizes the price of the stock because of the presence of risk. Okay, so sa pecking order quantity naman, pecking order theory naman, sabi niya, yung sequence dapat ganito. Spontaneous credit such as accounts payable and accruals, tapos interest bearing, preferred, retained, and then new common stocks. Kaya ganyan yung ayos kasi class dahil pataas ng pataas yung cost of capital niyan, no? But the pecking order theory contradicts the idea a while ago do sa capital structure natin na dapat di kasama yung accounts payable, yung accrual. Kasi siya, ang sinasabi niya, according to the pecking order quantity theory, dapat lahat kasama. Pero di ba, pinag-usapan natin sa umpisa pa lang that the accounts payable and the accrual should be removed. No? Tapos ganyan yung arrangement kasi ang pinakamababang cost, interest bearing, followed by preferred stocks, and then retained earnings, and then the highest cost is the new common stock. O yung trade-off theory naman, ano sinasabi nito? Now, the trade-off theory is that it states that capital structure is based on a trade-off between tax shields and bankruptcy costs. So, sinasabi nga natin, as you increases your liability, the tax shield of the company also increases. At pagka tumaas yung tax shield, that benefits the stockholders. But the problem with that is that there is a trade-off with the bankruptcy costs, no? Kasi once you increase your liability, your bankruptcy cost becomes material. Okay? Kaya nga dapat meron siyang threshold, no? Meron tayong maximum. 'Di ba? Nakita naman natin sa computation natin that will increase the price of the stock. And then the last one, no, signaling effects. So, sinasabi rito, meron tayong dalawang klaseng signaling effects. One is the symmetric and the other one is the asymmetric. So, when we say symmetric, the information by the investors and managers are the same, no, about the company. Pero pwede ba yun? Siyempre, mas may alam nung nasa loob. Kaya meron din tinatawag tayong asymmetric information, no, which tells us that the managers have different and usually better information about firms' prospects than do investors. But the signaling effects is saying something about the company, no? So let's say they have a project, and then the project, no, they are not so sure about the project if it will be successful or not. Kaya kung hindi siya successful tingin nila, and they need funding for that, they will not issue liabilities. Now they will issue stocks because they would like to share the risk to other investors. But that additional shares of stocks to be issued by the company, no, will be perceived by the investors as a way of the company to pursue with the project, but would like to share the risks with the other investors. So in that case, the price of the stock of the company chances are will decline. Kasi sinishare mo lang yung risk mo sa amin, sabi gano'n ng mga investors, kaya nagbebenta ka ng stocks, no, to get that project or to do that particular project. But if the company is very certain, no, that it will be successful, hindi sila mag-i-issue ng additional shares of stocks. But instead, they will borrow money. And when the investors, no, saw this, no, saw that the company is borrowing instead of issuing shares of stocks, the perception or the signal that it will give to the prospective investors is that the company is very certain that they will be, no, successful in the project. Kaya ayaw nilang i-share yung risk sa iba. Now, they will shoulder the risk because they are certain that it will be successful. So, yun yung sinasabi naman ni signaling effect. No? Mali pang spelling, ano? Double L yung signaling, ano? Okay, so anyway, that ends the presentation for this one class.